I often get asked, how do you find your first investor? So I've got five ways that you can do that. If you're like a lot of people, including myself, when we first started in real estate investing, we were able to buy our own property, right? We were able to come up with a down payment. We were able to qualify for a mortgage with the bank, all that sort of stuff. And we didn't need an investor. And there are lots of people who don't want to have investors to help them grow. And that's fine. But there are a lot of people who want to figure out how to do this whole investor thing. So for me, I hit a wall where I think I had about five doors, and the banks were now saying no to me. And I knew that I needed a different strategy if I was going to keep growing as quickly as I want to. Now, if I wanted to slow everything down, then yeah, I probably could have kept on going, but I wanted to accelerate my progress, my success in real estate investing. So I knew that I needed to find another investor. I often get asked, how do you find your first investor? So I've got five ways that you can do that. Item number five is talk about real estate, wherever you go. Learn how to craft an excellent elevator pitch. There's some great videos out there. Actually, I've got a video on my YouTube site about how to craft your elevator pitch. But basically, everywhere you go, you want to talk about it. So, just an example, when I was working at my day job, I'd come in after the weekend and coffee break or whatever around the water cooler. People would say, "Hey, how was your weekend?" It's like, "Yeah, it was great. I was, that house. Remember, I told you I had that house that I had purchased. The rental. Yeah, we were just doing some work on it this weekend. We put in some new flooring and stuff, and looks great. I've got new tenants moving in next week, and I would just talk about my real estate stuff, and obviously, if people don't want to hear about it, they're not going to ask, but lots of people did, and I was excited about it, right? So I just got to share my enthusiasm with others, and I just talked about it. And honestly, when I first got my first investor, I wasn't really looking for an investor. It was me coming in. I think I probably had my first three doors, and I was just talking about stuff. And so finally, someone from work came in and said, "Hey, we really like what you're doing with your real estate investing, and we're interested in real estate investing, and we've got some money, but we have no idea where to start. Could we invest with you?" And so my short answer was yes. The storyline whipping through my head was, I have no clue how to structure this. And I was upfront. I said, I'm not really sure how we'll do it, but let's figure it out together. And so we did. And so basically, you talk about real estate wherever you go. So if you don't have any deals, that's okay. If you have not owned any rental properties before, no problem. But I'm assuming that you're learning. You're reading, you're watching videos, and you're putting into action stuff that you've read or learned. So you can start talking about that stuff with people. It's like, hey, what did you do this weekend? Oh, I watched this really good Robert Kiyosaki video, and he just talked about, the power of real estate and stuff. It just really made me think about where I'm at, just stuff like that. You don't have to be an expert. You just got to be passionate about what you're learning and what you're putting into action. Okay, so that's number five. Talk about your real estate stuff all the time, wherever you go. Number four, look at lots and lots of properties and run the numbers, right? So when I started out, my first property was a house I found on MLS, and I ran the basic numbers. Okay, you pull up a mortgage calculator that's online, and you go, okay, well, my payments are going to be approximately this because the bank requires me to put, X amount down. So I have a ballpark of what the monthly numbers are going to be. Okay, and including taxes and insurance. So what about the revenue, the income? Okay, well, in that neighborhood, let's do a search for that neighborhood on whatever is really popular classified search engine. Use that. So if you have got a particular area, put in the zip code or put in the postal code, and you know 3 bedroom, 1.5 bath for that area. Okay, you start getting an idea. Now you can go a little bit deeper. We actually look for specific houses in that area. Now you start to see, a range. Okay, so $1,200, or up to $2,500 for a 3 bedroom, 1.5 bath in this area. Okay, so that's good. I need to tighten that up a bit. And so you just kind of keep on tightening. And this is about looking at a lot of properties and run numbers. And so there are templates online that you can use. You can create your own basic Excel spreadsheet where you talk about what your expenses are, what your revenue is going to be, and you start analyzing deals that way. For those of you who have got a couple doors already or a bunch, you already know how to do this. In fact, you can probably do the rough numbers in your head without even having to write it down. Do write it down so that you can document the stuff that you're looking at, so you can refer back. And but you just keep on analyzing properties, analyze, so that eventually, that when you can make an offer, when you're ready to make an offer, you are much more confident about your numbers. Okay, so that's number 4. Look and analyze lots of properties, and I'm talking hundreds of properties. And you might say hundreds, like, it can take you just a few minutes to analyze a deal. Once you get that basic principle down of what I just shared with you, you can analyze them quick, right? And, if you're analyzing stuff that you're seeing on MLS or in your neighborhood, you get a realtor to help you. Or if you're part of real estate investing community where they're sending out wholesale deals or other investment type deals, look at what other people are doing and apply it to what you're doing. And doesn't mean you do everything they're doing, but you take in that knowledge and you apply it and you analyze these properties. Okay, the third thing is put together deal performas. So what I mean by that is when you're analyzing these, you want to be able to put them on a single piece of paper. When you're actually doing a deal, it's going to take more than a single piece of paper, but like an executive summary, basically, deal at a glance, and where you talk about this property. Okay, it's property XYZ at this address. You talk about, is it a 3 bedroom, 1 bath, all that sort of stuff, projected expenses, projected revenue. So annual income, what is your net income? And based on the money that you put down or investor puts down for a down payment and closing costs versus what the annual net revenue is, that will help you get your ROI, your annual ROI. If you want one of my 7-page performas, just write in the comment field 7-page performa and give me your email address, or you can DM me, that's fine too. And I'll send you a sample copy of my 7-page performa. But you want to put these together so that you're comfortable with them. Okay, so first of all, talk about real estate. Secondly, look and analyze hundreds of properties. Thirdly, put together deal performas, very basic ones. 2A, I've got 2 parts to 2. Number 2A is present. You've got to present these to people. You've got to present them so that you gain experience. So you might say, well, I don't know of anybody to present. That's fine. Do you have someone else living in the house with you? Doesn't matter if they're 60, 80, or 2 years old. Present to them. Actually, if you can present to a 8-year-old and they understand the basics of it, then you're good. You're good to go, because you need to keep it very basic. The more complex the deal, the more confused the investor, the less likely that they're going to invest with you. So you want to keep it super simple and crystal clear. Okay, so I won't go into it today, but I do talk about my investor funnel, how I start from up here and bring them all the way through down to where they actually close and sign and put money down. But you want to present. What I like doing, what I recommend to my students is find another investor and say, hey, can I present? this potential deal to you, and you take all the pressure off of them. You take all the pressure off by saying, you know what, I'm not asking you to invest with me, but I need to practice this on people. Will you be a guinea pig for me? Can I practice this on you? Most people will say yes. You buy them, lunch or coffee or whatever, and you present your performer to them. And what that does is it gives you practice, and they're going to ask you back really good questions, right? They're going to ask you questions you don't know the answer to, and that's okay. But you're going to get this practice so that ultimately, when you get before people who are ready to invest, you've had a whole bunch of practice, right? So that's what you need to do there. So present to lots and lots of people. A to B is don't fake it till you make it. People can see through that, right? So some of my early real estate training, people would tell me, fake it till you make it. You know what? I tried it. It failed me. And so what I do now is I'm just upfront with people, and I'll just say, that's a really good question. I don't know the answer to it. Let me get back to you. Let me find out and let me get back to you. So that does a whole bunch of things right there. One, it just raises your level of genuineness, right? You're not faking it. You're not saying that you know something when you really don't. And especially if that person actually knows what the answer to the question is, but they don't let on that they know, they can see right through you. They can see right through that you're not being authentic with them. Secondly, you get to learn something, right? That's a great question. Let me write that down. And then afterwards, once you're done, you go off and you find out the answer to that question. So now you get to learn something. Now you get to go back to them. And whether that's a phone call or an email or whatever, and you get to say, hey, here's what I found out. Okay, awesome. So now that creates another touch point with them, right? That you wouldn't have had if you faked it till you made it. Creates another touch point, as well as they go, that was really good. That guy or girl did what they said they were going to do. They went off, because how many people do you talk to who say, that's a good question. Let me go and let me get back to you on that. But they never get back to you, right? A lot of salespeople do that, especially when they're new salespeople. They'll say they're going to do something, but they never do, right? So when you don't fake it till you make it, your credibility just goes way up. You learn more, and you follow through on what you said that you're going to do. The number one thing to getting an investor is take action, right? Because if you don't do any of this stuff, right, items 5 through 2, if you don't do any of that, how are you going to get an investor, right? And lots of people struggle with this, including myself, where you'll learn something, but you're like, what if this happens? What if that happens? Who cares? You got to take action. Obviously, if you're making an offer on something, you want to have some backup clause. Like don't like gamble. I'm not saying gamble. It's like blackjack table, and you have no idea, and you go throw down, $1,000, and you no clue. Don't do that. But if you're going to educate yourself and you're going to learn how to play the game, all that sort of stuff, and then you feel more confident, then you start with a smaller amount. I'm not condoning gambling. And this isn't gambling. As Kiyosaki says, there's risk in everything. It's about managing risk, right? When I drove from A to B yesterday, right, I managed my risk. I've got a valid driver's license. I was aware of the signage. Notice I didn't say obey. I was aware of the signage, speed limit, don't enter, all that sort of stuff. I put on my seatbelt. I made sure that my mirrors were in the right spot. That's all managing your risk. Now, if I gave the keys to a 10-year-old and said, drive from the airport to our house, that's crazy. That's risky. That's not managing the risk very well. So it's the same with real estate investing. You manage the risk. Is real estate investing risky? Yeah. But so is driving a car. So is investing in the stock market. So is getting married, right? But you manage the risk. You You think through the scenarios, you talk with other people, you gain experience, you take action, and you learn from it. And so without taking action, you're not going to get anywhere, right? It's the same as riding a bicycle. How do you learn how to get up on a bike so you don't fall over and move forward? By taking action. You actually get on the bicycle and you pedal. And are you going to wipe out? Yeah, you're going to wipe out. But you're going to gain experience from that by taking action. Okay, so if you want to get your first investor, this is what you need to do. Number 5, talk about real estate everywhere you go and be enthusiastic about it. Number 4, look and analyze at tons of deals, right? Analyze the numbers. Number 3, when you see numbers on a deal that look good, you put it into a 1-page or a 7-page performa. From there, you present your performa to as many people as you can, and you say, I need you to be my guinea pig, until you get to the point where it's like you've got a good deal and you present it to someone. And because what will happen is people will go, you know what, this is interesting. Someone that you asked to be a guinea pig will at some point say to you, you know what, this looks really interesting. When you do get a live deal, come back and let's talk. Doesn't mean that they're going to close, but they're a step closer to closing. And then they're going to refer you as well. So present, present, present. Don't fake it till you make it. Be upfront, learn from your mistakes. And finally, and the most important, is take action. So what I mean by that, again, is if you learned one thing in this last 20-minute video, one thing, take action on it. Because what it is, it's like you're building a step, right? If your goal is up here and you want to get there one step, no. But you can get there in multiple steps, many steps. So by taking action on one thing you learned today, that's a step that you've built and you've actually got up on it. So now it's like, oh, the view's a little bit different up here. Okay. Well, now that other thing makes a little bit more sense. Great. So then you learn something new, you take another step and you just keep on doing it. You keep taking action till you get those steps all the way up to where you get your first investor. All right, I'm Cam Rowland with Creative Investor. I hope that this has been helpful to you. Please comment. Let me know if this is helpful. Share it, comment, like, subscribe. Thank you very much. Have a great day.